the industry, particularly, I think oil demand is going to be just kind of leveled out. There's a small supply and demand imbalance in favor of demand long term. The supply demand imbalance developing in natural gas is huge, right? When we look at all the electricity demand is about to skyrocket. It's going to almost hockey stick on us. So we can't generate enough with renewables. As we talked many times, we're years away from being able to do this with nuclear. Because remember, we talked about this last night, right?
Yeah, we sure did.
Yeah, China, again, no rules, no restrictions, no limitations, no protesters, no environmental, tree-hugging wackos to tell them they shouldn't do that. They just do it. So they have like 29 plants they're building now because they know they need it. 5 years, Ryan. 5 years, no interferences, no problems, no overruns, no nothing. 5 years. All right. The United States, the international average is 7 to 10 years. 10 years being right around right. We take longer than that. We run 12 to 15. So it's going to be a while for alternative sources, including nuclear, to rise up to meet this demand. We have to meet the demand or we fall behind in key technologies, in industrialization, and a lot of other things. There's only one way to meet it. Well, there's two. There's two ways to meet it. One's coal. We ain't doing that.
Really dirty.
Really, really dirty. And, just not, it doesn't have a good reputation. That one would be a tough sell to get through. So that leaves you with natural gas. Fortunately, we're blessed in the United States. We have a ton of natural gas. So, but the demand, you're starting to see prices have been moving higher. I think at some point you're going to get a sustained move a lot higher. So how do we play that? Well, right now we're being a little cautious because some of these stocks have run up, but it's the royalty trusts right now, the leading royalty trusts. They're throwing out between 8 and 12% in regular dividends. I believe some of them even pay monthly. So you've got this. Now, remember, the royalty is based on how they own all this land. The royalty is based on how much oil and gas is produced on the property and what the selling price of that oil and gas is net of expenses. So the higher prices go, higher the royalty goes. Now, the key to this is the company has to be really good at replacing declining production. Because, years ago, they would do royalty trusts and they would just set them up and throw the keys on the table, walk away. It would run off. So you'd what looked like a great high yield investment each year got a little bit less, a little bit less, a little bit less, and the terminal value of the thing would be zero. So that's where we're kind of looking to play this now is the royalty trusts like Blackstone, which has over 20 million acres, I believe it is, of oil and gas properties. And it's about 50-50 as to whether it's oil and gas. They're in all the major basins. BSM.
DSM.
Blackstone Mineral Royalty Trust.
My bad.
Sorry, yeah. These guys have been around a while, and they are really good at replacing declining production. They're real active in the Permian, which is, of course, the hot spot right now, but they're in all of the basins, including like the Utica and the Marcellus, that are really big natural gas producers. So you buy these things and you just kind of forget about them. You just let them compound. Dividend comes in, you can reinvest it, spend it, whatever you need to do. You get a down move in oil price and the dividend falls, buy more.
10% dividend, by the way. So pretty sweet yield here.
Right. So, if you get a drop in oil from geopolitical concerns or whatever, just buy more. That price is not going to stay low forever. The other one's Dorchester Minerals, DMLP. And I think this one is yielding between 10 and 12 right now. And same thing, been around a while, really good at predicting what's going to happen. Replacing lost production and that type of thing. Now, I don't have a crystal ball. I don't know exactly what oil and gas prices are going to do over the next few years. What I do know is looking out there that there's nothing to replace natural gas with. Okay. We can't do it with nuclear soon enough. We can't do it with renewable for decades, realistically. Okay. Drill, baby, drill. The oil company executives are not going to do it. The government may want them to. There may be some benefits economically. Of course, there would be, right? But if you don't find a way to offset that and replace the cash flows that the oil and gas companies would lose, they're not going to do it. It doesn't make fiscal sense for them to drill themselves into bankruptcy. So it's just going to be a pretty disciplined approach. And then the other thing that I'll throw in, and this is something I took from Charlie Munger, drill, baby, drill from a national defense point of view is stupid. Okay. There's only so much of this stuff on the planet, right? You don't want to give away the cheapest, most accessible, most reliable power source. You want to have a military supply of this stuff, because the guy with the last gallon of this stuff wins.